Global financial system has a problem. The fact that it's getting worse and debt levels are exploding only creates an even bigger issue. Governments are now running out of options, and what most people don't realize, this isn't coming in the future. This is happening right now. Global debt has surpassed over $300 trillion, including governments, corporations, households. It's the highest level ever recorded. And as the war continues on in Iran, this is putting increased strain not just on the US markets, but more broadly on the global markets as oil prices continue to spike, putting ever-increasing demand on people's bills. For years, this has happened. The system worked. Global financial was fine, but this is now starting to crack. Things are changing, and they might be changing for the worse. Governments are making a tough decision. They're deciding what they want to do with interest rates, and no more than the US, and we get that announcement later today. But essentially, as interest rates continue to rise, debt becomes more expensive. And right now, well, governments are paying huge amounts just to service those existing debts. You've heard it quite a lot through the US administration with Donald Trump, but it creates pressure across the entire system. Interest in spending and interest in growth simply put on the back burner. More money is now going towards interest payments than is going towards funding national security, military, or even healthcare in certain countries. But here's where it gets dangerous, and here's where this could impact you. The fact that as governments start to spend more money, they're issuing more debt. This pushes yields even higher. The bond market sees incredible stress, and well, this just increased costs to you and I and everyday consumers. It creates a cycle that essentially feeds itself, and over time, it becomes impossible to sustain. Something has to give, and that's why when you get debts and you get governments trying to balance the books when you can't, this is where essentially people lose out. This is kind of why people hedge with gold and why people hedge in the crypto market. They're looking for a way to get rid of the dollar, to move away from their native currency because, well, it's only going down in value as debt and interest continues to go up. So it brings us to the central banks. They face an impossible task: keep rates high and completely destroy the economy and risk breaking the system even further, or lower rates and risk inflation returning, spiking prices for everyone. Either way, it's a very difficult decision to make, but one that has to happen. And all eyes right now, particularly in the US, are on what Jerome Powell's going to do. And certainly the indications are that rate hikes are going to be coming sooner than many people expect. So what happens next? What can we look at right now to indicate exactly how this plays out? Well, history gives us a clue. When systems reach this point, as they have done in the past, this usually becomes one outcome: drive liquidity into the market. More intervention. The government has to step in and essentially print bills, sell treasury bonds, and just inject money into the market. More money entering the system generally means that we see inflation hold, but this could be where risk assets or investing becomes a really good measure. Things like Bitcoin, things like real estate, all add benefit if you are hedging against inflation. Gold may even see another rally to over $6,500. So where does it leave us right now? The debt crisis isn't going away. In fact, globally, it's getting even worse. And as the US continues in Iran, this is going to make things even worse. What can you do as an investor in this market? Well, sometimes it is best not to have debt. As interest rates potentially move up, having debt would be the worst thing in the world. Hedging against that in things like gold and silver, or more importantly, in the crypto market, could be a way to just offset some of this increased risks. But what do we need to look for? Central bank decisions, Federal Reserve decisions. These are going to give us indications as to how the market feels right now, and then, more importantly, what our next strategy can be. So if you want to stay up to date with more macro finance news, then hit that subscribe button. This is my brand new channel that I want to bring you the latest and breaking news, keeping you plugged into what is going on in this market. So until next time, thanks for watching, and I'll see you very soon. Bye-bye.